Hello, everyone. Welcome to a new episode of Tech Can Save Us podcast brought to you by Literal Humans. As always, I am your host, Paul David, founder and CEO of Literal Humans. And I'm joined today by Ahikam Kaufman, the co-founder and CEO at SafeBooks AI. Welcome to the pod, Ahikam.
It's great to be here, and thank you, Paul, for having me. Thank you so much.
Of course.
Appreciate that.
Yeah, of course. We're going to talk about revolutionizing financial integrity here today. By way of introductions, Ahikam, the team at SafeBooks, they're building a cutting-edge platform powered by the world's first financial data graph, which we'll get into. It's designed to help finance and revenue operations teams automate complex contract reviews and maintain absolute revenue recognition integrity. Ahikam is a seasoned technology executive with an incredible track record of scaling businesses globally, from co-founding Check, which was acquired by Intuit, to leading finance operations at HP and Mercury Interactive. His expertise spans fintech, SaaS, and corporate finance. So let's jump in, Ahikam. Let's get right to it. We like to explain the landscape in the first question. Talk to us about this modern financial data graph. Explain what it is to our audience and tell us why it's essential for today's modern CFOs.
Okay. Hopefully I'll be as clear as possible, but feel free to be a proxy to your listeners and ask me tough questions in case I don't do a good enough job in explaining this. So we'd like to think that the number one challenge, infrastructure challenge in the office of the CFO and CAO, Chief Accounting Officer, remains the data. Today, more like any time ever before, we manage the processes in the office of the CFO and CAO across disparate systems using multiple data structures in each of the systems. They do talk to each other, but the data is not structured the same way. However, finance teams are running into a unique problem where they need to validate and document the integrity and accuracy and completeness of the data across these systems. A financial data graph, which is like technology that can connect data nodes from different systems, allows us to do two things. It allows us to create that audit trail, which is a very common phrase in finance, but it's mostly very manual work, not automated. So it allows us to create that audit trail across systems to make sure that each transaction, the way it's managed and handled in the CPQ, in the CRM, in the billing system, in the ERP, and so on and so forth, correlates across the board. The other thing is, in the world of AI, it even amplifies the value because it can provide an agent the full context of the data end to end. One of the challenges that you can have with AI in the finance world is that an agent cannot deal on a system-by-system basis. It has to see the full context because, again, in finance, unlike many other parts of the organization, the data has to be compliant. The data is regulated. The data is also money. So you need to have the full context across how the original contract looks like, how the various billings that match to the contract look like, whether the journal entries in the ERP system matches that billing sequence. So the ability to provide agents using the graph technology, the end-to-end context, amplifies the value of the graph. And SafeBooks has created the very first financial data graph for the office of the CFO and CAO.
Amazing. And just digging into that a little bit more, help us understand how you all bridge that gap between those fragmented documents and the actual system, system data that prevents that revenue leakage. And would also be curious, how did this get started? Was there a light bulb moment where you said, hey, we need to shift from payments and fraud at Intuit to solving this audit readiness problem at SafeBooks?
Okay, so you're asking two very good questions. So responding to the first question about the data structure, the challenge is that the data is structured differently in each system. Even common data fields like amounts and currencies and name of customer and customer ID and all of that are structured differently. So the ability to leverage AI to connect the dots between the systems and creating this unified data set. By the way, one of the things we constantly talk about is that today, using our technology, you don't need to replace any of your existing systems. So keep your existing systems, which were very difficult, hard, and expensive to implement and deploy, and just recreate that data layer on top, which can help connect the dots. So we are using AI today to understand the data structure in each of the systems and constantly make sure that we kind of bridge it across the systems. And the reason, actually it's a good segue to the second question, because I'd like to think that a lot of that very difficult technology to kind of like create was not available before AI. So the ability to have sophisticated models that can look this very extensive large data structure and connect the dots between them and marry it together was only available over the last couple of years. And someone who came from the office of the CFO and always experienced the data to be a number one problem, I really felt like this is something we might be able to solve with AI. And I'm happy to say that we're able to solve it. The other thing to consider is, I think in the world of AI, the technology before the AI allowed you to create niche solutions for each problem. Let's say for like billing solutions or for RevRec. Right now, because the technology is so vast, it allows us, we're not like a billing solution, but it allows us to do or cover so many use cases across the board, because what we're hearing constantly from finance team that they would like to avoid buying multiple niche solutions for each of the problem, ending up having to maintain multiple systems. So the ability to create a new perspective on data like we do, and basically once we create that unified data lake, which no other system doesn't, it's not being done by your ERP or your CRM or any of the other, or your BI, or even Snowflake or Databricks. The ability to bring all the data together for the first time, not just put it in the same location, but actually marry it together. And then you can run agent across, providing the full context to get the completeness and accuracy you need for that. That's like was never been able before. And we felt we can do it using AI technology, and that's what we've done.
Amazing. Okay, sorry. Yeah, just, sort of getting into this piece around product, we're going to dig a bit more into your product. With SafeBooks being audit ready by design, how does that change the relationship between the company and, say, its external auditors?
So I'd like to think we're still in the early stages of that. For example, being able to, I think it could change a relationship in multiple ways. First of all, your data is much more accurate. Now you can cover 100% of your data in real time. Not only that, think about that. A lot of companies resulting from the audit process, whether it's like a review quarterly or it's annually, they typically get feedback from the auditors on additional things they need to do. Now, everything you need to do, you can actually automate. SafeBooks can basically automate any activity, chore, or action that a human being is doing, by the way, across structured and unstructured data, including documents, including terms from contracts, things like that. So think about the fact that, let's say, you're getting additional best practices that you need to deploy for your company, for your organization at a large scale. Say you have a large business, hundreds of millions of dollars in revenues and above, you can now do it like with kind of like simple prompting. So I think that's one area where you can make your auditor more comfortable about how do you exercise your business and validate your business on a daily basis. The other thing is the data that we capture already today, and because we're validating everything end to end, we can lend that data or that access to the auditors so they can perform a much more meaningful audit and frictionless audit, seeing what our agents have done. So instead of asking the team a lot of questions and asking for a lot of sampling, they can get all of that directly from SafeBooks. Also, SafeBooks having a SOC 1 certifications allow the customer to rely on our controls to feel more comfortable about the integrity, accuracy, and completeness of his data. So if you're a CFO or CEO today, most of the granular work, especially the data level, is done a few layers below you. And we're all human beings. We can't expect that everything will be checked by everyone all the time. As people, we make mistakes. As people, sometimes, you have like a resource constraints, right? People take vacations, people are off, people are sick. AI never sleeps. AI never takes vacation. So you can, by deploying SafeBooks, you can get the comfort level as a senior executive who actually have a liability and responsibility like the CFO or CEO, that your team gets all the right insights and the data validated and checked year round. I hope I answered your question.
No, you did. That was great. I mean, it's a great segue too into this idea that autonomous reconciliation is kind of redefining the role of RevOps, revenue operations. Would love to hear a bit more about how the platform kind of enforces financial policies in real time rather than waiting for that end of month close. And also just the challenges of reconciling data across multiple disparate systems like your CRM, the ERP, billing. Why is SafeBooks uniquely handled to, uniquely equipped to handle that?
Order management or revenue integrity, that's one use case. I think the same can apply for other use cases like procure to pay or payroll. But the idea is that we can do three or more things. The first thing, we can constantly validate the integrity of the data across systems, making sure all the data reconciles, whether it's amount, currencies, billing schedules, things like that. The second thing we do, because sometimes systems would have mistakes. Someone changes an API between systems. Someone configure a transaction, a deal, which is not like following the traditional path. So things can get lost in translation where you move data or out data between systems. The other thing is that we can execute policies. So let's say a company has a booking policy, a billing policy. We can take these policies, let the agents read them, and then execute them fiercely across each and every transaction, whether large or small, ensuring there's no money left on the table, ensuring the data is captured correctly for whatever purposes, for billing purposes. So the execution of policies. The third thing we're doing is we can document all of that. So if you think about people generating wallpapers, which is the terminology used today by finance to kind of document the work, that wallpaper captures data from different sources, reconcile it all, takes all kind of like actions around it, and then injects the explainability of what they've done. We can do all of this by machine, so we can transform the human in the loop to become the reviewer, not the preparer. So I think the combination of all these things, constantly check the integrity of the data across the system, execute policies that companies have today, which they don't expect to execute on each every transaction because it's a lot of work. Now they can. The ability to scale your business without adding more people, and the ability to document all of that. It's what SafeBooks does, and that's what helps people ensure that. Now, when you do that on a daily basis, it's first of all easier to remediate because you're remediating fresh data as opposed to something that happened. The other thing is, the other ramification is by the time you get, as you mentioned, to month end or quarter end, all your data is vetted and checked. And it's vetted and checked. I think the entire concept of a close process is something that was invented to have like a very constrained effort in looking at everything because you can't do it every day. Now you can do it every day. So why to push that work to be back and loaded as opposed to, basically peanut butter it and be able to review everything in real time when the data is fresh, and then being able to remediate it when everything, or cope with mistakes or errors when it's all remediatable or when it's all fixable, including, for example, and I'm sorry, the reason we emphasize the order to cash, because that's also customer facing. A lot of time, if you have a billing error, you want to make sure you're on top of it before it gets to the customer, right? Let alone the other ramification of rev rec and leakage and all of that.
Yeah, I've never heard that phrase peanut buttering before. What is that? Is that
when you peanut butter, when you smooth the process across, when you spread it?
That's a great one. I love peanut butter.
I don't know. I've heard it for years, but maybe it's only me. But yeah, the idea is that, again, if you were living in a magic world where every day you can fix yesterday's mistakes or errors, you would much prefer to do that as opposed to wait. The reason you wait is because we're manually limited to where we can focus on our effort. So on day-to-day, we used to focus our effort on the execution, and then at the close process, we would focus on documentation and remediation. Now the remediation can happen on a daily basis.
Yeah, I mean, you're talking about kind of
we are borrowing a lot of our technologies from the cyber world. Imagine in the cyber world, someone would say, you know what, let me scan all of our vulnerabilities for 90 days, and only after the 90 days start to remediate.
Yeah,
but probably that's what you don't want to do. You want to remediate.
You're talking about a profession. I mean, like I think so many, finance and accounting professionals, they're so careful, but also, like careful can be slow, but you're saying like being careful in a way that is, fully or partially automated, that is that is allowing you to move faster. So this question of like, how you're adapting principles of like real-time risk automation and fraud prevention to still ensure that absolute integrity of financial data and revenue recognition, like how are you getting that done? How are you accomplishing that?
So if I understand your question, then I think the only way you can do that is with technology. And I think it's just that until today, the only resolution to accelerate your time to remediation or time to vulnerability would be like deploying more people and adding more people in the process. But also we know from the very first classes in economics, if you're adding more people to a very constrained space, you're going to lose the marginal productivity. So you're going to reduce that. Again, adding more people doesn't always, it's like not the magic formula to add more productivity. But at the end of the day, people are limited. But because we reached a situation today or a level today where the technology can perform pretty much every examination or action that a human being can do across structured and unstructured data, allows us to amplify our ability to be able to identify things in real time. And again, at the end of the day, we surface these issues and finance can decide whether they want to deal with them or not, or remediate them or not. But I think knowing about the issues or the problems is 80% of the solution.
Right.
And it's very difficult for finance people to do what the machine is doing today, because the machine is looking on so many data points and so many kind of like rules or things they need to check across so many systems. And it's just not humane. So I think the same way we expect driving to be autonomous in a few years and we can go back, here it's it's a much easier problem than autonomous driving, but for some reason, finance teams remain very, very manual. And because of the technology we create around the graph, we think we can really revolutionize how data integrity, accuracy, and completeness is being done and executed by finance teams.
Yeah. Just one more product question. So like, how do you navigate, like, there's a lot of talk about the challenge of hallucinations, with AI tools. In your case, the product requirement is 100% accuracy and compliance. So how are you all navigating that specific potential product challenge?
And I think we reached that because, again, of the graph. Because everything has to be linked, you cannot hallucinate. You're hallucinating where you totally trust on the model to give you an answer for a question. Here, the agent has to look at the contract. It has to look at the quote. Right. It has to look at the supporting documentation. It has to look on the data in the CRM, in the billing, in the LP. So you're operating in a very structured data environment. The environment is structured. The data does not correlate, but the environment is structured. So with the graph, we provide that alignment that allows the agent to see everything end to end much better than a human being.
Right. No, that's great. That's a great response. I mean, not relying on black box models. So we'd love to talk about your growth strategy. I mean, you're trying to basically scale a trust platform in an era of rapid, AI adoption. I'd be curious about, the current economic climate. There's a huge focus on, accelerated cash flow and profitability and, revenue. Does that kind of environment act as a catalyst for your market penetration? And talk us through, what are kind of the roadblocks for your growth strategy in terms of scaling there?
I'd like to think that we're identifying a few things, especially in 2026. First of all, we see a lot more starvation for AI in 2026 in finance teams than ever before. I would like to cautiously assert that think about this guy, this developer coming to his boss in 2024 or 2025 and tells him, hey, we have all this technology for vibe coding. And someone rejects that because he doesn't see the ROI or the value. I think everyone understands that the paradigm shift with AI can really transform the way we work. I don't think it will eliminate the human in the loop, but it will empower the human in the loop in much better ways than exists today. So I'd like to think we'll see more starvation for AI in finance team in 2026, where I think the technology becomes more reliable than maybe in 2024 and 2025, especially what we do. That's like one thing. I think the other thing is, especially when you deal with companies who needs to scale, I think the alternative of just deploying and hiring more people is not the best answer. So they're looking for ways to scale without the need to constantly use like a capacity model. I think in the areas of finance, a lot of the other things we're saying is that people can also make mistakes. So the combination of people and data technology that can help them validate the data is a much better answer for the needs of the modern finance teams as opposed to before, because you also have the, I think in sales or marketing, you can make mistakes. And even if it's the data is 80% right, you can still execute growth or leverage the data in ways that can help you. In finance, 80% is not enough. And the ability to reach high level of accuracy with a machine that you can trust on, I think can help CFOs, CEOs sleep better at night, knowing that all the details they are not exposed to on a daily basis are actually handled with a level of care because the machine supports their team in maintaining the integrity and validity of the data. So it's more like helping your team get their arms around the data.
Yeah, I love that you're keying in on to like the one thing we talk about a lot is the how much more emotional in many ways B2B counterintuitively is than B2C. And you're talking about like, CFOs and CAOs sleeping better at night, right? Like they're buying your product because they want to sleep better at night than the current tools allow them and the current structures. And that's something we really prioritize as we're talking to, because I think sometimes we forget that B2B buyers are people, are humans. That's why we named our company what we did. So focusing on, what you're unlocking for them, how you're making their job easier, better, smarter, I think is a really great growth strategy.
I would say even more than that. I think at the end of the day, I totally agree with you, but at the end of the day, my personal aspiration, if we can turn the B2B selling process to be more emotional for the buyer.
Totally.
In a sense of like, how can I make you more comfortable about your data? How can I make the deployment process to be straightforward and easy? How can we make your team, how we can become your trusted advisor? These are the things, because I think if we create a change in your emotional experience working with us and with technology and how it change your daily work, then I think that's where you win the heart and mind of the customer.
100%. Yeah. And one thing we talk about a lot too is like really understanding your buying committee and who they are and what their pain points are and I think a lot of times, startups, they don't map the buying committee. Maybe they map the ICP, the company, but they don't map the IBP, the, individual buyer profile, or the buying committee that all needs to say yes and talk about what they're feeling, what they're going through, because making a big decision about, bringing on a partner like yourself is massive. It has implications for their professional reputation, their career advancement, their families even, so digging into that, talking about that more. I couldn't agree more. I want to dig into your growth strategy then. So like, what is your strategy then for talking to those early adopters at like a more emotional level? And then, scaling into maybe more traditional legacy heavy industries. Just tell us about your approach to sales and sort of growth strategy, for such a specialized SaaS product.
Yeah. So I'll mention a few points. I hope some of them will resonate with you. So first of all, we started direct, and one of the understandings that we had was the heavy lifting in the sales process is actually the technical piece, meaning the ability to demonstrate the capabilities and tailor the use case to as many teams as possible or exposed to the buying process. And then, if needed, to plan and execute a proof of value or proof of concept. So the heavy lifting here is not about like the negotiation or whatever. The heavy lifting is how can I convince you that the technology can solve your problem? How can I demonstrate that on your data, which is always like an eye-opening experience? And then from there, the process becomes pretty straightforward and technical. We do think that being able to work with some partners can accelerate the go-to-market kind of like a pace, because a lot of finance team, they already have consultants that they're using to be able to use them on best practices, especially companies who are planning to go public or companies who are public already. So potentially beyond after going direct, we do have the opportunity, and we're having a few early relationship like that where we can work with partners to accelerate the go-to-market and even to deploy some of our solutions, as opposed to, because what we're enabling now is that we would like the initial experience to be very straightforward. So We make the use case work for you. As a customer, you don't need to deploy it, we deploy it. But going forward, if you want to add use cases or change or modify, you can do it yourself using prompting. And this is something that we can do or our partners can do. So I would say,
Yeah.
again, finance teams are conservative. So being able to either demonstrate the platform on your data or use a trusted advisor like the consultants you've been using to design your control environment or your best practices in the office of the CFO can help accelerate that process.
Yeah, I'm so glad you mentioned partnerships. I mean, one thing we've been hearing a lot about is just, partnerships in 2026. Everyone's talking about it. I think it's really interesting to see people pivot towards partnerships in a moment when people feel the economic environment is tight, is constrained, or is maybe trending in a direction. Tell us about the role that strategic partnerships, say with major accounting firms or ERP providers, play in your current growth strategy.
I think for the major accounting firms, it's more like some of them will not directly sell technology that works with the audit clients. So they can't sell technology to the audit clients, but they can definitely refer clients who believe they can benefit from having more automation around their data integrity. But I think on top of that, you have when you're a large company, operating the office of the CFO and CEO requires a lot of knowledge, and a lot of teams will work with external teams to execute their controls, to have best practices, and the ability to engage with these partners to sell technology, because for the most part, they're selling processes, could be a great opportunity for us. So, because today they're selling best practices and processes, which are great, but then someone needs to deploy them and execute them on a recurrent basis. And that's exactly
100%.
where we come into play.
Would love to wrap up with just a question or two about your personal leadership journey. We like to kind of end on that. You've had leadership roles at giants like HP and Intuit, and you've been an advisor and a board member for several companies. Would love to hear what are some of the lessons that you've learned from your experiences that you've now applied to your own startup, and talk us through some of the common mistakes that you see founders making in your advisory roles that you've tried to navigate around in your current role.
So I think some of the learnings I've had were first of all, you need to really be able to build a good team around you. And I think if you're a really, in my humble opinion, a good CEO, you try to bring people which are better than you in each and every domain they need to play, whether it's the product, the engineering, the technology, marketing, and so on and so forth. So you want to bring people that will educate you as opposed to you educating them. So I think that's one thing. The other thing is you constantly need to look at the market and adapt. Paul, I can't emphasize it enough, and it's great that personally, I came with all these years of experience, and I'm sure you've done as well. But I think everything that happened over the last couple of years, the world is rewriting the book. So I think a lot of our past experience, I'm not sure it's even applicable. I think today you're seeing all of a sudden companies who are looking to have tailor-made solutions as opposed to the traditional SaaS world, right? The whole focus of the SaaS world over the last 3 years was build a great product, give a great product that applies to the masses. Then, right? Now, all of a sudden, people, because of AI, they want a tailored experience. They don't want to buy a cookie cutter. So I think we are seeing paradigm shifts in how enterprises are consuming software. In many ways, they're saying, we have all this data, you have AI, so I'd like to have something that is relevant to my data, my way of going to market. Creates a lot of opportunities and challenges for a company like us on how we think about the product. What is the essence of the product? So I think it's almost I personally feel, and I don't know if it's relevant for everyone, but I personally feel that instead of bringing my entire lifetime experience into this venture, we are all learning together. The entire world is learning together. How do you sell AI? How the customers should buy AI? What are they? For example, from the very beginning, we focused on building the technology in the platform, and we relied on AI to tailor the end user experience. All of a sudden, that's what the entire world is doing. They're looking for this headless application. The workflows are really adjustable. it really feels like, all the past experience is great as a kind of like a very general experience, but we are all trying to learn something in a totally different new environment. Not only that, I feel like in the era of AI, we need to cope with a new kind of like phenomena, which is do it yourself. I think, in my humble opinion, people interpret AI as like, I need to do everything myself. However, for example, the challenge in the office of the CEO and CFO is that the greatest model will not give you the data foundations that the agents can see all the data end to end. So you need the infrastructure in order to execute. Even like, so, and that's exactly what we provide. We provide that unified data set that allows you to operate agents in AI with high level of confidence and reliability of the data. But I think right now, some of the confusion in the market is because I think people are saying, right, wait a moment, I can build my own application, I can build my own tools. And I think that, again, is a new learning experience for many, many companies that they need to cope with.
Yeah, what you're saying is super interesting. And like, yeah, this insanity you see on the board behind me is our strategy session planning for a pitch we've got. And this idea that, yeah, it's one thing to build tools. Like we're all builders now. I spoke to another agency owner. He's like, we're all selling AI. But like what you're saying is we're all builders, yes, but the foundation on which you build needs to be solid. The data needs to be, solid. You need to make sure that you're building on a strong foundation. And that's exactly what we came to in this pitch prep around the competitors for the company we're pitching. They just have, a tool that companies can use for consumers, but they're not building, intelligence, like data intelligence, that's specific to the sector. So that's part of our pitch now is helping the company go to market with that and understand that that's a differentiator, within their product. And it sounds very aligned with what you're talking about in terms of...
We are talking about the fact that you can't afford to hallucinate or lose accuracy or integrity of data, which the model may do even. So the ability to look at all your data end to end is the infrastructure we provide. And then on top of that, you can build from that infrastructure, you can build the tools you want, or the work papers, or the reconciliation, or all the controls you want to build on your processes.
And I'm asking this selfishly for the pitch that I'm doing, but how do you communicate that the value and the ROI of building that infrastructure, that closed loop data infrastructure to your prospects?
So I have to admit that the way we would like that they will measure us is based on accuracy. So we tell them, give us like data sets and we'll show you what's our level of accuracy versus what we had before. So I think that's kind of way to look at it in finance. And I think as far as the ROI is concerned, again, my best advice to people is, again, measuring innovation with ROI could be tricky. Again, it's the same example of that engineer that comes to his boss wanting to play with vibe coding in January of 2025, and he's being asked to demonstrate the ROI. I really think the ROI of innovation is your ability to scale, is your ability to, in our world, it's your ability to scale, it's your ability to avoid mistakes, which could be critical. It's the ability to equip your team with the tools they can use at the cost of, like, let's say, a single employee.
Yeah.
It's for finance teams, sometimes it feels it's much easier than as opposed to our technology. And at the cost of, like, let's say a single employee, you can equip your entire team with tools to increase their level of accuracy and to increase the level of confidence in the data.
Yeah, no, I think that's a great point. And I would even argue too, like that, I love that you've chosen accuracy as your sort of value statement, because I think it's a very short step from accuracy to ROI. Like people know the cost of mistakes and they know the benefit of not making them. So I think that's great. But also leaving space for people to like build and play and, like I think you're walking that fine line. I think you're doing it really well. So yeah. Ahikam, this has been a fantastic conversation. I really appreciate it. I think your journey shows that, even in some of the most regulated industries like finance, there's massive room for innovation when you combine that deep domain expertise you have with the right technology. So that's what I've loved about this conversation. Where can our listeners learn more about the good work you're doing at SafeBooks AI?
Mostly our website and our company LinkedIn page, so SafeBooks AI. So yeah, we try to post on a weekly basis.
Amazing. Well, we'll share those links in the episode description, and just want to thank you again for joining us. I know you're a very busy man. And for our audience, this has been another great episode of Tech Can't Save Us podcast, brought to you by Literal Humans. As always, I'm Paul David, your host, and we've been talking today with Ahikam Kaufman, the co-founder and CEO at SafeBooks AI, talking about revolutionizing financial integrity. As always, give us a review, give us a 5-star rating so we can keep bringing amazing CEOs like Ahikam Kaufman onto the show. Thanks for listening, everybody. Bye.